Hey, welcome back to Commercial Financing Experts Academy. My name is Su Chung. Today I'd like to talk a bit about commercial financing on the commercial properties in general versus residential, and why it is imperative for future financing to be looking at more on commercial side, even when you finance residential property. Now, some of you are opposed to getting a high rate because you're so used to in the broker channel getting the lowest rate, cheapest residential rates for your clients, right? The biggest thing that I saw in the residential broker channel is that yes, the rates are going up, and many people are going towards fixed rate, right? The biggest challenge, the problem coming with fixed rate is that it comes with high IRD, the interest rate differential penalty, right? We all know this. And yes, monoline lenders are the exception, which have a very fair way of calculating the penalty. However, monoline lenders are having a difficult time financing rental property, especially on the fifth, sixth, or more property. You know what? Even on the third property, I've had issues with that because they're too reliant on rental income. That's the way it is, right? That's how the excuses right now have been sent back to us as a way for declining the business. But if you go to any bank lenders, they'll approve the loan most of the time, right? The other challenge is that why am I paying this penalty down the road when I know my investor needs to leverage that perhaps in year 3, year 4, year 5, or before the end of the 5th year, right? Happens. They need to get out of it. They want to exit strategies that can just sell and get rid of the property. If the tenants are in there, they can't get out of it, if it's a residential property especially. So if we deal with residential property, can you get commercial money? Yes. Most mortgage brokers don't realize that it's possible. And based on the DCR calculation, it's actually even better in most circumstances. Like, they don't worry about the property tax, they don't worry about the heating at all. So PPT, property tax, and heating, or even the condo fee or strata fee is not even included in the calculation for the DCR calculation in some of the small business lending circle, right? They don't use any of this, which is a huge expense, right? Which takes away the ability to borrow. And a lot of the scenarios that I've come across is that they even do a 1.1 DCR calculation, meaning that if the rent is $1,000, the rent only needs to be $1,100 to get a mortgage. That's paying $1,000, right? Gas is rent, not rot. 1.1 DCR, simple enough to qualify to get. So why not have them go to the commercial side or small business lending side to get it done? You know, yes, you have to talk to an accountant about the legality aspects and the liability and all that for a holding company, but it can be done. The interest rates are a little bit better. But here's the thing. Small business lending do not have IRD calculation with posted rate. On SBL, small business lending, and commercial, they don't have posted rate to use IRD calculation, right? What does that mean? Well, that means on the commercial small business lending side, the interest rate differential penalty is based on the best rate at that time with that term, similar to a monoline lender. Bet you didn't know that, right? And most people don't know this at all. So they avoid using that because they think it's going to be costly and the penalty will be humongous at the end of the, if they break the contract before the end of the 5-year term. That's not true, right? I've had $1 million mortgages, $3 million mortgages that was broken, and yes, it was huge amounts still because it's a dollar size, right? But it was not using the posted rate. It was using best rate, discounted rate versus best discounted rate at the time. And so it's very favorable to what it is with the monoline lenders. Now, why would you want to do that? Well, that's one way, because exit strategy at any time is not hefty penalty. They can sell, they can liquidate it, and they can actually refinance it in a different lender and not be too concerned about the huge penalty. Yes, up front, the interest rate is slightly higher. Right now, you're looking at the 5-year best rate is roughly about 40 basis point to 50 basis point higher than the 5-year fixed term on a residential. It's only 40, 50 pips, right? So if the current's 3.5 on a 5-year term, you're only getting 3.95 on a, roughly 3.95 on a 5-year term. Wait, the spread isn't huge. And really, if you break it down to the monthly dollar amount, it's not that large. Right? And considering that it's a rental property, if they get financed on the 6th, 7th, 8th, 9th property, I am certain your investor will be more than happy to pay the difference and pay your fee if you can get it done. Whereas you won't be able to do it with the monoline lender, right? Unless you find a better way to finance a 9th property with the monoline lender, let me know. My name is Stuart Trung. Email me, sue@sharonbanksecrets.com. If you have any questions, just email me as well. If you like what you see with my video so far, comment below. And if you want me to talk about something in the future, I can touch base on that. I just want to touch base a little bit on this and then move on to the next topic I want to talk about. You know, at the end of the day, you do what's in the best interest for your client is getting the loan approved. So if there's no way to get a loan approved on the mortgage broker side, consider looking at small business lending or commercial side. Right? Feel free to reach out to me if you have any questions, any deals that you have a hard time getting it financed. Sue@SharonBanksecrets.com. Take care. Have yourself a great day.